Good morning, good evening, good night, wherever you're watching this transmission. Tis I, Mike Martins, thanking you very much for joining me on my little humble channel here. I got a really good article for those living down under, as the economy is strong with this one. For those that know what I'm talking about, inside joke, go to my channel and go under community and scroll down. The economy is strong with this one. Is it really strong right now? Is Australia in a downfall or a downward spiral? What is happening with overinflated housing markets, price of amenities, price of commodities, price of everything going up? What is happening? Job losses, falling wages, and less work. The most important business sector in Australia just delivered another horrible report card. Oh no, it's not looking good. I like this guy, this football night. That's really cool. Employment and wages growth across Australia's service sector, the largest employer in the country, went backwards in April. New orders continued to decline while margin pressures remained intense. Sales remained weak. Well, if someone's got money, what are you going to do, I say? Firms said slow wage growth, tight consumer discretionary spending, and competition from abroad is making it difficult to pass on price raises to customers. The trends suggested the loss of momentum in Australian economy in the second half of last year had likely extended into 2019. Well, it's going to go to 2025. I think Australia has anywhere from 14 to 16 quarters to reverse trend of their overly inflated asset bubbles. But what do I know? I can't read. Employment and wages growth across Australia's mammoth service sector went backwards in April, reflecting a continued decline in the network. Hold on. That's a major concern, not only because the services sector is the largest employer in the country, but also because the RBA is banking on strong hiring to help lift economic growth, wages, and inflation in the years ahead. Now, guys, I did an article last night on my channel, and it's getting a bit of traction. I read an article, and it was something that I've been forecasting. Let me go to my channel here. It always goes into this. Okay, let's go here. Canada's GDP needs money laundering. Now, $200 billion was laundered through Canada. Thank God it wasn't me doing it, because I'd be in jail. Other people get away with it. So $200 billion, not pesos. So how much? Now, I really want to know who's got the cojones out there, the cojones down under, to actually start looking into the whole money laundering thing. How much? Well, do you think they had a huge meeting in China before they started moving their money off the offshore, saying, "Okay, guys, now in our meeting agenda today, where do we move our money? Is Canada the only country we could trust, or do you think Australia's rules are lax?" That's the question, guys. How much laundered money is in Australia? Is it like Canada, $200 billion? Yeah, that's the main question. So I want someone with cojones down under to write us an article, I say, and then I'll read it. That's a major concern, not only because the service sector is the largest employer in the country, but also nobody cares. Let's move on. The Australian Industry Group's AI Group Performance of Service Index, PSI, rose to 46.5 in April after seasonal adjustments, up 1.7 points on the level reported in March. When I say nobody cares, guys, it means I just read that. So it's like no one cares, I just read it. Move on. PMIs measure changes in activity from one month to the next. In this case, for Australia's service sector, a reading above 50 points to an improvement, while sub 50 figure indicates a decline. The further away from 50, the faster the improvement or deterioration is. So, at 46.5 in April, activity levels declined at a slightly slower pace than a month earlier. However, activity has now weakened for 4 consecutive months, and the details of the report weren't all that pretty. Australian Performance of Services Index. Yeah, you could see this. It's not good. It's going to go back to 2013, if not maybe 2012. Heck, maybe it might even get to early 80s level. According to the AI group, employment fell, wages went backwards, as sales new orders continue to decline, albeit at slower pace than a month earlier. I don't even know what that word means. ALBEIT. I've never said that. I think I've said it on here reading Australian articles. Okay, hand to God. I know I can't read, but I don't know what that means. Albeit, albeit. In trend terms, employment across the sector is now declining at the fastest pace since early 2016, a result at odds with the recent acceleration in hiring reported in official data from the ABS. The wages sub-index was also fairly dire, dropping by substantial 10.9 points to 48.2 in seasonally adjusted terms, the lowest level recorded. Do you know what seasonally adjusted terms means? Here, I'll even look it up for you guys. Seasonally adjusted terms. That's when you usually say when you're in the loss and you kind of want to renegotiate the rules as you go along. It's even translated from Chinese. I type in seasonally adjusted terms meaning, and then it has it all in Mandarin below because somebody's reading these articles and want to translate it in their language. A seasonally adjustment is a statistical technique designed to even out periodic swings in statistics, movements in supply and demand related to changing seasons. An annual rate that has been adjusted to account for seasonal fluctuations in data, therefore knowing seasonally adjusted annual rate. So guys, here's the deal. It's I see it like a bell curve grade where everybody in the class gets a high grade and I get the lowest grade. So they give me a better mark just to kind of keep me in with everybody else. So I see it as a bell curve adjusted rate. So they would take all the best years they had and they say, oh, this year's, okay, well, let's just move it up a bit, you know? The new orders reading for April at 44.6 is not a great sign for activity levels in the future, given it is deemed to be a lending indicator. In trend terms, new work is declining at the fastest pace since 2013. We went back on the graph. 2013 was pretty low. Margin pressure also remained acute, with the impact cost continuing to rise at a decent clip, while selling prices declined at a faster pace. Well, more people are selling than buying, right? Tells you a lot. Increased competition from overseas sellers, slow wage growth, and tight consumer discretionary spending have all led to a fall in the number of services businesses reported that they are able to increase their prices in recent months, a AI group said. Now, here's the deal, guys. Consumer confidence, and I've been saying this for a long time. Someone else is going to come around and just mirror the video like it's been that they've been doing all these years, my videos. But you know what? Consumer confidence is the lowest it's been since 1975. That's how low it really is. Fitting with weaker sales and a decline in new work, supplier deliveries declined at faster pace while investors were largely unchanged. Despite the decline in reported sales and new orders, capacity utilization across the sector lifted 79.5 during the month, a result that would normally indicate improved prospects for business investment the period ahead. However, that appears unlikely given the continued deterioration in conditions being reported elsewhere. So here it is. Yuck. The Australian PSI key numbers. There it is. Sales, employment, new orders, supply deliveries, and finished stocks. And average wages, 48 Wow. Ooh. And then you got retail trade here in the index here. As seen in the above table above from the AI group, the weakness was broad-based last month, with activity levels across all subsectors aside from hospitality declining from all the levels seen in March. Unlike the headline, PSI and activity subindexes, which are seasonally adjusted by AI group. The gauges for subsectors are presented in trend terms to eliminate volatility, often seen from month to month. Hospitality stood out as one of the bright spot of positive sector activity in April, with businesses in this sector more likely to benefit from April's extended run of public and school holidays than those in other sectors, the AI group said. So the improvement there may have been caused by one-off factors. Activity levels at retailers remained dire. Again, deteriorating at a faster pace than a month earlier. That's a concern given this subsector is the largest individual employer in Australia behind healthcare. Again, so healthcare, that's a public sector job. That's not a private sector job. Anybody that works in the public sector, that's nice, but it's the small businesses and the retail private sector jobs that are funding your jobs. So Australia, healthcare is being one of the biggest employers. Watch out, because it's all public sector. We need to focus on private sector and small businesses and middle businesses, and even, believe it or not, some of the big corporations are private sector. But here's the problem with some of these big corporations. They don't want to pay tax in your country. Woo! Retail trade remains particularly weak, the AI group commented. While another concerning report card on the largest and most important business sector in Australia, the AI group said the weakness in April may have been seen as a result of disruption caused by Easter and the ANZAC day holidays. I don't know about Easter. I don't know if that would cause enough disruption in the force. For many businesses-oriented services business, the distribution to trade from the combination of holidays led to a weak customer demand in April, with a number of businesses now noting slowing sales inquiries, it said. Some respondents also noted increased competition and constraining activity and exerting downward pressure on prices. Yeah, that's what usually happens when your neighbor's selling everything made in China and you're selling everything made locally. They're just going to sell everything dirt cheap. And that's just how it works, right? The ongoing drought in Australia's eastern states was also seen as a drag on activity and was difficulty in obtaining finance for customers operating in the construction industry. Hey, another private sector that's getting nailed to the cross. Caution ahead of the federal election was not nominated as a factor behind the weakness in demand, although the PSI is deemed to be a soft data indicator, reflecting what firms are reporting rather than actually activity on the ground. The persistent weakness seen in the recent months suggests the slowdown in Australia's economy in the second half of last year likely to be continued into 2019. Why? Because everybody's pulling out of the housing market. Everyone's trying to sell. There's an oversupply on the market today, and everybody wants to sell. If you bought in the last 5 years, you are screwed, because there has to be 15 to 16 quarter retraction of overinflationary period. With the lack of capital outflows from China, it's going to make Australia's economy go strong. So whoever's got the cojones out there to actually look into money laundering in Australia, if there's any money laundering coming from, or was Canada just a target to money laundering? 200 billion. A bunch of guys had a meeting saying, we're just going to focus on Canada for money laundering, Australia for real estate, and we're going to do like New Zealand. We're just going to buy that whole country right out without no one knowing. And then kind of, comment below. I want to know in your comments below. Thanks for watching, and if you want to support this transmission, share this video. Share a video. And they're deleting all my Australia videos, by the way. They just keep getting removed one by one. Let me know. Comment below. Thanks for watching.